I just want to move on here because we've got a number of topics. I want to get some thoughts from you. I want to move on to the fact that a lot of exchange-traded notes, ETNs, are being delisted this year, but they're not being liquidated. Did I hear a groan out there? Okay, well, I'm going to have you. That's why I have you guys here, to pull the threads out and explain this to us. Some of them are continuing to trade on the pink sheets. Here is your shot to sound intelligent without sounding wonky, because I want to start. Dave, I'm going to give you the first shot. Can you explain two things to us? What is happening with the exchange-traded notes? Why are so many of them being delisted but not liquidated? And is this a problem for ETF investors? Is this a problem for the ETF community? And again, don't get too wonky. Just explain what's really going on here.
I'll go backwards. So yes, this is a problem for the industry and for investors. Credit Suisse had a bunch of exchange-traded notes. They were under the Velocity Shares brand. Things like triple leveraged and triple inverse natural gas exposure. They decided they want to get out of this business, but instead of just shutting the products down, they closed them for new money and then delisted them, meaning they took them from NYSE or NASDAQ or CBOE where they were, and they pushed them into the pink sheets. What happens then is all the volume dries up because it's the pink sheets. Many investors can't even trade on the pink sheets. And yet these funds still have, in some cases, hundreds of millions of dollars trapped inside them, and investors really don't have much of a way to get out. I think this is a big issue for the industry. Most of these were held by institutions, not by retail investors, but my email box has folks that are trapped in some of these things as well. So it is an issue. Yeah. Really what this means is you've got to pay attention and know what you own and why you own it, and not get caught blindsided when somebody decides they want to delist a product.
Chris, why did they push these things to the pink sheets? Why didn't they just, liquidate the whole fund? What's the value in keeping them on the pink sheets and creating all of this confusion and illiquidity?
Well, I mean, for one thing, they're gonna, if they're gonna abandon the product in a sense from a marketing and from from a product efficiency standpoint, which is a way in what's happening. They're sort of orphaned at the bank. The other thing you have to keep in mind too is that unlike an ETF, these exchange traded notes don't have a board. So there really isn't this oversight, committee to sort of look over those things. So these banks are very accustomed and familiar with creating custom products and custom strategies for their institutional and for their high net worth clients, on the derivatives desk or anything like that. These exchange traded notes, they're like, hey, look, why don't we just do the same kind of thing and put it out there and see what happens? But then they get left without anyone really to account for it. And it's a problem because once they turn it off for creation and redemption, once that vehicle goes away, they lose the efficiency that we're accustomed to in exchange traded products, which is a very dangerous thing.
Isn't the answer that they still make money on it? I got to move on, Chris, but isn't the answer? They're still making money on it, right?
Of course they are. Yeah. They're charging a fee until it goes to zero.
Well, that's the answer, right?
That's essentially what it is.
Yeah. All right.
They should be shutting them down. We're
not going to solve this problem.
Probably not. But what we could do is,
Dave, isn't that the answer? Let's just get to the bottom line. Shouldn't they just have shut them down rather than just collect fees on them?
100%.
I'm not trying to put words in your mouth. Tell us.
No, this is just unadulterated avarice on the part of Credit Suisse, right? They are keeping them open so that they can continue to collect their fee, or in this case, reduce their liability as these products wind down. It should be criminal. It should literally not be allowed because it is incredibly anti-consumer. It just hurts investors. There's no reason for this other than the greed of the issuer.
Right, and it's just important to note, these are not exchange-traded funds. These are notes, and it's, everyone out there listening, look under the hood.